Thank you for watching this video. This video will show you how to do cash flow forecast in QuickBooks Online. At this moment, they have QuickBooks Online. They offers a statement of cash flow that's on actual basis, but not a cash flow forecast tool or report at this time. So I'm going to show you how to do cash flow forecast, getting the financial reports from QuickBooks Online. And this is our second video. The first video, it has to do with the statement of cash flow, and it will show you how QuickBooks Online they prepare statement of cash flow. And QuickBooks Online, statement of cash flow is always on accrual basis, not on cash basis. There's no way to change the cash basis, always on accrual basis. So in order to understand the statement of cash flow, you also have to run various financial reports on same accrual basis. For example, balance sheet, income statement, you need to run on accrual basis. So this video will focus on cash flow forecast, and if you're just looking at this video, you may get confused and everything. So you may want to look into this video first. So you will see this link, the video you're watching under description or more. You will see this link. You can click this link and first view the statement of cash flow, and then you understand how to do the cash flow forecast. And I will leave this on end of this video in case you need this link. Okay, so it's basically statement of cash flow is a cash position change over time. So cash earned from profit, that's from a business, and receive additional cash. It could be from bank, third party, or your own money, and cash spent on long-term activities like buying equipment or buying a new business. So in cash flow in QuickBooks, you will see the following activities, three activities: operating, investing, and financing. Okay, so in QuickBooks, let's go to QuickBooks now. Okay, so in order to do the cash flow forecast, you will need to run a couple of reports, financial reports mainly. The first one is the balance sheet report. When I did the first video, statement of cash flows, I did it for 9 months. 9 months for 2015, January 1 through September 30th, 2015. So in order to get change, you need to run report from 12/31/2014 through September 30th, 2015, and accrual basis. Okay, and once you run this report, you will see the difference, the change here from here to here, from December 31st to September 30th. That's pure 9 months change. So it'll give you the change. In order to get the change in here, you just customize it here, and totals columns is still total, and it's basically get the change from previous period. So that's how I got that number. And then basically without cents, I don't need those cents for now. Okay, so that's how you get these numbers. And then I ran statement of cash flows, which is this. As you can see here in statement of cash flows, the first number you see is net income. That comes from P&L. So I also ran P&L for the same time frame. This is the P&L. As you can see here, the number should be 198, and this is also on accrual basis, very important. Balance sheet also on accrual basis, because the cash flow, statement of cash flow, is on accrual basis. So 198, so this is the income, I ran this on a quarterly basis. You can run it for all 9 months. So 9 months, a quarterly basis. All you do is change this rows columns to quarters, and so that's how I got that number. So the statement of cash flows, it'll show you, of course, first the net, you know, net income. That's part of operating activities, and operating activities, it deals with mostly the current assets and current liabilities of balance sheet accounts, except the depreciation part. And then it will show you investing activities. In this case, buying equipment. If you're buying a business, new business, it will be part of investing activities. And then you will financing. How did they get that money? In this case, you own money and borrowed money a little bit. And so this gives you net, basically net cash increase or decrease for that time frame. This happens for 9 months, January through September. Okay, and then basically cash increase plus beginning cash balance is your ending balance, which is 427, and you should match with your balance sheet number. It's right here, 428. This is the number, 428. And by the way, they also include the if you have undeposited funds like here, they include as part of the bank balance. So make sure to include this as part of the bank balance. Okay, so that's all the actuals. Now how to do a forecast. So based on this, I'll show you how to do forecast. So you need to download all three reports to Excel. Okay, Excel in here, Excel in here, and Excel in here. Okay, and if you want to do the forecast, the forecast for P&L, you may also need another report like a sales by customer type if you want to go bottom up to forecast your revenue. So this is the report you need, sales by customer summary, the standard report. Okay, so I'm going to go to the balance sheet first. Actually, I will go to the profit and loss first. Okay, so this is the 9 months actual. Just download it from QuickBooks Online, and it will also give you, if you want, the percentage of income. Income is 100%, and distribution of that income to cost of goods sold and overhead and the gross margin. Okay, so first thing you need to do, I'm going to do this for 3 months, October, November, and December, for 3 months. And whenever you do forecast, you have to make certain assumptions. So I did the forecast of revenue, did 105, and you can do the percentage growth, or if you have details, you can do it from bottom up, which is this one here. So you have to download this and figure out all the revenue coming in Q4. Okay, and so this is, I'm expecting a rapid growth, so you have to make assumptions and write it down here. What are your assumptions? So the per shipper analysis, expecting rapid growth, and the revenue is going to be 105 for Q3, which is for 3 months, and the cost of sales, which is 33%. 33% of this is this, so it will still remain the same. And here's your gross margin. This minus this is your gross margin, and then you have your overhead type. I'm saying it's 31,500. Although this one is a demo one, it's not always reflective of how the business will run. So I'm planning to hire a few more people, and overhead will run around 30% of total income. Overhead is 30%, and cost of goods sold is 33%, and the difference between those two, 37%, is your net income. So that's our forecast. Okay, so now let's move on to your balance sheet. So in cash flow, balance sheet is the key. So that's where you need to do the forecast. First, you do the forecast, the income statement, 3 months, and this is the number you need. This is the only number you need for your balance sheet. to do the cash flow forecast. Okay, so let's move on to the balance sheet. Okay, so here's the balance sheet, and so these two actuals uh, download from QuickBooks Online, and it's basically changed from December 31st to September 30 change. You will see the net cash increase or decrease. In this case, 9 months it was increased, and now you need to do the forecast first for December 31st for 3 months. Okay, so this one will come back later on. How do you get this number? Okay, so in here I'm saying end of September it was $50,000 AR. So you got to do the little more detailed analysis for very few key items like AR, inventory if you have inventory, and some other items. But you know that's what the forecasting tool you need. So basically, in here I'm saying 50,000 here, and it will grow the revenue. The AR will grow up to 85,760 because the revenue is growing. And I did the little analysis at the bottom in here. Okay, so here's your beginning balance for AR, and the sales for 3 months is 105. That's from your P&L, and here's the subtotal, these two, and we receive payment basically you know 2/3 of this amount, and enough December 31st we'll have ending balance of 85,760. That's a change of 35 between beginning and ending. And also did the same thing for inventory forecast. Beginning is this, and we'll, since we have a huge inventory balance here, you know, we don't need to buy too much. So basically, we're going to buy about $18,000, and we're going to use our existing inventory to reduce it. And so that's how I got those inventory and AR numbers. Okay, so in here, 35,000 down. It was 50. I'm sorry, it went up 85, and inventory down 460, 444, 16,000 down, and in here, and I'm buying equipment. In here, as you can see here, it's 93,000, and in here, ending balance forecast for the fixed assets is 183. So we're adding like 90,000 worth of fixed assets, so that's money going out investing activities. And then you have a little bit of depreciation, that's part of operating activity. This is only one from most operating activities. The rest is all from current assets and current liabilities. Okay, so this is kind of subjective how QuickBooks Online does their cash flow. So I'm just following the way they do it. Operating activities, accounts payable, I'm saying is we can go up. We go up by 10,000. Used to be 39, now it's 50,000. And then we'll pay up some American Express cards, 98.05. Now it's 0. I'm going to keep Chase card. Balance will remain about the same, and we're going to pay up some credit card, Visa credit card. Okay, also part of operating activities, and these two will go down. It will stay the same, both staying same, no change. And the line of credit will also stay the same. And then coming down here is a line of credit, another line of credit from Chase. We're going to pay off that one, so the balance is 0. So this is a financing activity, a negative way this time. And then the other one is net income is 38,850. So that's your net income for Q4. Okay, so before you do this, you gotta have your balance sheet is balanced, of course. All right, so here is your total current assets. The total current assets right here, and current. I'm sorry, I picked the wrong one here. Here's your current asset. Total assets is right here. Total assets is right here. 1093,454. Okay, 1093,454, and total liabilities and equity also the same. So the difference between those two, of course, is 0. This is the one. There's no difference. So make sure they balance. Uh, that's why it's balance sheet. Okay. So now, uh, so you go through all these, and uh, so this number uh, is basically the difference between all these. This is like a plug-in number. So in order to get the balance sheet balance, this is like a plug-in number. So if you add from here to here all the activities, uh, you know, you get this, and that should also match with your net decrease, in this case net cash decrease for that time frame. So 123 used to be 427, and now it went down to 303. So 123 is your cash decrease, and as you can see here, we bought 90,000 worth of that's a big change there, and paid off finance, paid off loan, a line of credit loan. So that's why cash went down 123 for Q4. That's our forecast here. So once you have all these numbers, then you can go to the cash flow forecast format, which is this. So this is the statement of cash flow format you get from QuickBooks Online, which is this one, cash flow format right here. And so in order to get that, it's basically this is how you get it. Okay, so the net income is 38,850. That's from your P&L, and then change in your AR, inventory asset. You get all those from your balance sheet, and in here is your net cash by operating activities, 18,562. That includes your income, and then you have a fixed assets addition. So this is your buying 90,000 worth of equipment, adding to your balance sheet, and so that's your financing activities. And then you have I'm sorry, investing activities, and then you have a financing activities, paid off loan. In this case, a negative. If it is adding it, like here, it'll be positive. Since this is pay off, it's negative. And so this is a net cash increase for period, is basically negative cash flow. It's your cash flow went down, and previously went up for 9 months, but this time forecast wise it went down 124,000. And so the cash at the beginning was 427. So if you subtract this number to this, so your cash at the end of period is 303,871. So that's the number you have on your balance sheet as well. So it is this number, your balance sheet number right here. Okay, so that's basically how you do the forecast, and this is the format they have, and if you do step by step, I think it should be pretty clear. So thank you for watching. As I said, if you need to get how they prepare statement of cash flow, is the YouTube video link, and you'll see end of this video as well. So anyway, thanks for watching. Subscribe to our YouTube channels, and we also have Facebook. Like us on Facebook. Okay, I'll just leave this on for a few seconds, just in case you need to write it down. You should see this link right on the video you're watching too.